Welcome, everyone. It's my honor this morning to introduce Justin, which I think most people actually know Justin, MD of Scan Display, qualified chartered accountant, and very interested in tax. And that's why he's the man that will explain all of this to us.
Really wonderful to be here. And I'm actually here in Rosebank with my admin team. Hi, admin team. How are you doing? And just showing how important this VAT ruling is. So really great to be here. Who am I? Managing Director of Scan Display, been in business for 30 years. It's the 30th year. Greening is my passion, and I do mention that Event Greening Forum, an organization which promotes greening, and we're really growing and we need support. And EXSA, thanks for your wonderful support of greening. We had the EXSA Awards, and it was great to have all the green awards. Thank you for that. I was the founder, and I'm currently the treasurer of Event Greening Forum. I was also president of IFES, the International Federation of Exhibition and Event Services, an organization of the World Standby Builder Organization. There are 300 members in the world. It extends to 50 countries. We've got a big thing going on next week. We've got Euroshop. We've got an IFES pavilion. Those of those EXSA members come and say hi to us. We're on the pavilion. And it's been very great to be part of an international organization. And I was president in quite a difficult time during COVID 21 and 22. I got the red card, but I saw that through, and it's great to have the industry back again. I was chairman of EXSA in 2006. It feels like a lifetime ago, 20 years ago. I'm also a chartered accountant. I'm a CA and qualified in the 90s. And I've also got a higher diploma in taxation, and I studied that for 2 years at Wits University. So I'm very interested in tax. What's important, I think, just before I get on to the nitty-gritty, is I'm not a consultant. So I'm going to give some advice or whatever, but I'm not. It's not my profession. I'm also not an expert. So I often think that in the land of the blind, the one eye is king. I'm not an expert, but I know a lot more about this topic. And it's always changing. Tax is changing all the time. So I'm not in touch with all the latest regulation. And obviously, tax is two-folded. There's one, court cases, which then make practice change the way SARS practice the Tax Act. And those court cases happen all the time. So tax is always changing. And then obviously with the latest legislation, I'm not always up to date with it. But I do track this VAT issue and look for it if there are any changes. And then I can't be held responsible. So don't go and send me a legal letter when you do something and it doesn't work out. So there's a little bit of a disclaimer. I think before I go on, I just want to cover a very important thing in tax. You've got exempt suppliers and zero-rated suppliers. Now, an exempt supplier is when an item is exempt. So a good example is domestic rent. When you rent a property, there's no VAT on it. It's exempt from VAT. And whoever owns that property can't claim the input tax. So it's an exempt supply. So there's lots of exempt suppliers. And there's a difference between exempt and zero rate. So an exempt supplier is an example that I've just given, domestic rent. A zero rated supply is when there's no VAT on the selling price, but the vendor, the person supplying it, can claim the VAT back. So a good example is bread and various foodstuffs where there is VAT that can be claimed, but it's not invoiced to the end user. So that's very important. And what we're talking about here is a zero rate supply. So we as vendors in the situation, if you are VAT registered, you can claim the VAT inputs. And I have been asked about this, this particular question about a month ago, that any VAT that you claim, so if you're building a stand made out of wood, any of the VAT you pay on the wood, you can claim that VAT as an input tax. But there would be no output tax if it qualifies under this ruling, and I will get into that a little bit more. So that's a very, very important factor in discussing this topic, exempt supply and zero-rated supply. I'm going to briefly go through the history of the ruling. It's been around for a long time, and it goes back to the 1990s. This was Sean McCoy, who was actually the chairperson of EXSA. I actually met Sean many years ago, and this was the first time that EXSA had a ruling in connection with this. Then Andrew Dunkley. Andrew was actually head of Gallagher Convention Centre. He was also our treasurer at EXSA, and at the time when I was chair, he was actually a wonderful treasurer, and this is the ruling he got in 2005. So it was an extension of the existing ruling. G. Bardenhorst got a ruling in 2010, so that was actually the accountant at the time, and we worked through Edward Nathan, and that was in 2010. In 2012, Nigel Walker was chair, and he actually got this ruling for SARS in 2012. 2015, Sue Gannon, who was actually the executive, like a Hunley in those times back, and she got the ruling in 2015. In 2018, Moses Nefale, there's Moses right there. Hi, Moses.
Hi, Mr.
Thank you. Moses Nefale got this ruling, and in 2018, that was 2018, and then 2023 is the latest ruling. So I will talk about the timing. There's another 5 years on the existing ruling and sort of EXSA's responsibility in terms of the ruling. And it's very important, this ruling, and I'll explain to you why. Why do we need the ruling? So in terms of the Tax Act, there are certain, if you follow certain schedules, you can get a tax zero rating on certain goods that are supplied, but it's quite a gray area. So why do we get the ruling? It's for clarity and certainty. So when we, for instance, get a query from SARS, and I'm sure you're all getting lots of VAT audits because the amount of VAT audits has increased over quite a bit in recent times, is all you can do is the reason why that zero rated the sale is because of the VAT ruling. So it creates such clarity and certainty, and it makes life so much easier. So that's very important, that in these rulings you get clarity and certainty. There's lots of uncertain things that happen in terms of SARS and tax, as you know, but this does really help. I think the next question is, what are the supply of services? So what are the supply of services in this case? So obviously we as an industry, often I think we supply product. We don't. We supply a service. And what's important is the definition, the services in terms of this VAT ruling, and we'll go through the non-resident and VAT zero rate. But I think what's important, it's arranging for the rental of exhibition space, and I will cover exhibition space separately. The arrangement for rental of goods, decor, fixtures, and fittings. So that's also important in terms of arranging, and it's sort of quite old-fashioned when it says decor. And obviously, this is a ruling going back to the 90s when, decor was a bigger word in those times. Designing the layout of the exhibition site. So that would be the exhibition stand and site. Erecting the stalls. So that means building the exhibition stalls. And obviously, that's an old word, but we all understand what it means. And dressing up and setting up the stall. So those are the services that apply for this ruling. And I will go through. The last four are very much in our space, where the exhibition space is a bit more generic, and we'll cover those in more. I will talk about that in more detail. So this is the ruling in a nutshell, and then I'll break it down. And I know, Chad, you were asking me yesterday on our EXSA group about pictures. I don't have many pictures, unfortunately. It's a text heavy thing, and it's quite a I couldn't add that many pictures, but we've just got to go through the detail. So although movable goods supplied under rental qualify for zero rating, so this is the section under the Tax Act where it says section 11(1)(d), this provision has a very narrow application. So what happens is SARS really helps us here, and they instead of under section 11(d), and I'm not going to go into section 11(d) because we have the ruling, so we don't have to cover that. It's conditional on the rental movable in, firstly, that it's been used for purpose of the foreign exhibitor enterprise. So I will cover that in detail. Secondly, the foreign enterprise should be conducted exclusively outside of the Republic. Thirdly, payment of the rental should originate outside the Republic from a country where the foreign enterprise trades. And that's also important, and I'll cover that. And finally, documentation or proof should be obtained and retained in accordance with section 11.3 MAD. It's meant to be made, but it's MAD in terms of the directive. So here's a copy of the directive here with paragraph F of table A in IN 31. So I will cover that as well, quite technical stuff. So I think the first thing, let's just chat about foreign enterprise. So what is a foreign enterprise? Firstly, being for purpose of a foreign, that is foreign exhibitor enterprise. So an enterprise is a business which is outside of South Africa. I'll cover that in terms of the next ruling. Is the next part of the ruling is 4.8.2. Secondly, this foreign enterprise should be conducted exclusively outside of the Republic. Now, what does that mean? Outside of the Republic. That means that if, for instance, Microsoft International, not Microsoft South Africa, decide, and it's a separate entity, it's a separate enterprise. Just remember for SARS rulings and for tax, it's very narrow definition. Is if Microsoft in America want an event in South Africa and it's managed by their overseas branch, for me, that is a foreign enterprise. Even though Microsoft's got an operation in South Africa, that foreign branch, and we've actually had a case in point there, where they're doing a worldwide information sharing. For me, that enterprise is exclusively outside of the Republic. So you look at the definition very narrowly in terms of enterprise. Thirdly, payment to the rental should originate outside of the Republic from a country where the foreign enterprise trades. So this is quite important. So if an example, let's say Microsoft in America does a job in South Africa, and that payment is made from Dubai, this doesn't classify. You can't claim this ruling because it needs to come from where the foreign country trades. So if it doesn't have an entity, an operation in Dubai, then you can't claim from that. So the payment needs to come from outside of the Republic. Now, often we get paid in rands, but the payment originates from outside of South Africa. That's fine. So let's say ABC, based in London, doesn't have an enterprise in South Africa. They do an event in South Africa and they do some exhibition stands. But ABC go and buy foreign currency. They go and buy rands in the UK market and use those rands to pay us in South Africa. That's still a foreign payment because the payment originates from a country outside of South Africa, even though it's in rands. So don't get confused that it has to be in pounds, dollars, euros, Australian dollars. It can be in rands as long as it's an external payment. How do we know that? You would get a notification from the bank that's a foreign payment. So it's very simple. And you would get a documentation on that. And it's important you keep that documentation. So if the payment comes in rands, but it's from an external country, that is fine. Obviously, you've got to have the other rules in place as well. But in terms of this rule, that's fine, and you will have documentation. I just want to cover what is an enterprise. An enterprise under Section 1.1 of the VAT Act, an enterprise is an activity carried on continuously or regular by any person or party in South Africa where goods and services are supplied to another person for consideration, regardless of whether it's for profit. A foreign business is deemed to be carrying on an enterprise in South Africa if it performs activities regularly within the Republic. So, because the show or the stand is done in South Africa, that doesn't make it an enterprise in South Africa. Even though there's an activity in South Africa, it's not an enterprise. So it's like if you go and visit overseas and you do some business over there, you're not based there. You're not a resident there. So you have to exclude the event that they're doing. Now, I'll give an example. We do mining in Durban. Now, for me, mining in Durban, even though it's based in UK Hive, they have an enterprise in South Africa because they do a major event here. So they actually, we can't claim, we have to charge VAT on that, and we can't claim that it's a zero-rated transaction. So that's an example of enterprise and in terms of the process of enterprise. So imagine if a casual business meeting is not an enterprise, but if it becomes substantial enough, and this is always a sort of a point that one needs to investigate and make a judgment call on, whether the enterprise is based in South Africa or not. So that's about an enterprise, how it actually works. The fourth requirement is documentary proof. 4.8.4, finally, documentary proof should be obtained and retained in accordance with section 11.3, made with paragraph F of table A in 1N31. Sure, quite a mouthful to understand, but that's the fourth requirement. So let's go on to what is documentary proof. So section 11.3, documentary proof to substantiate a vendor applying the zero rate. Where a zero rate has been applied by any vendor under this provision, the vendor shall obtain and retain such documentary proof substaining the vendor's entitlement to apply the said rate that the provision is acceptable to the commissioner. Okay. So in the next section, and now we have to go to documentary proof in an explanatory note. So IN stands for interpretation note. I know it's getting really complex now. But I think, so this is an explanatory note in terms of value added tax from 2016 with documentary proof required. And I'll go into the paragraph F. And paragraph F says movable goods used exclusively in a business conducted in the export country. So this is the paragraph F. I know it doesn't actually mention our situation because the business is actually not, this supply of the exhibition services is actually supplied not in the export country, it's actually supplied in South Africa, but it's deemed to be an export company. So even though it's not, and it's the same thing, often there's a deeming provision which then deems you taxable in a certain jurisdiction. So this actually deems your sale to be an export country, even though it's actually happening in South Africa. Now, the two things that are needed is a tax invoice and the proof of payment. So the tax invoice is the invoice from the tax invoice that you raise, which we would normally have, and the proof of payment. That's very important. I would also go on to say that if you're in doubt about where the enterprise is based, ask the client a question whether they've got any operations in South Africa and whether it's a branch. So if I've got a company XYZ that's in Mauritius, but they have a branch in South Africa, and that branch is part of the company in Mauritius. For me, they have an enterprise in South Africa. So it's quite, if you are in doubt, to cover yourself, ask the client the question, where does the enterprise operate? Do you have any operations in the existing enterprise? So that's important. There's nothing mentioned in the Act, I mean, in the ruling that we have a requirement to a judgment on where the enterprise is based. But if in doubt, get some clarity from the client. I think also what's very, very important in terms of this is for EXSA members only. So throughout the ruling, there's a mention about EXSA. So in light of paragraph, so it doesn't matter that paragraph 4.1, the supply of exhibition space by EXSA members to foreign exhibitors is subject to VAT at standard rates in terms of section 1A. So throughout this ruling, it mentions EXSA members, and it talks about the requirement of EXSA, and Halia will chat about that just now in terms of what we've got to do as EXSA, as an EXSA organization. I think, let me go on to exhibition space. Okay, so it's specifically mentioned in this ruling that the supply of exhibition space by EXSA members to foreign exhibitors is subject to VAT at the standard rate in terms of section 7A of the Act, and there's no provision which allows to be zero rated. So if you are selling exhibition space, you need to charge VAT. It can't be zero rated, even if the entity overseas is foreign based. So for me is and we often have this in a situation where you're charging space and you're charging for the stand. For me, if an invoice has space and the stand, for me, is you can't, you have to charge VAT. Because what actually happens is, because there's the space included in the same invoice as the stand invoicing, so for the stand building, it actually taints that invoice to make it space, a space invoice. So if you are doing some planning, if you want to raise a separate invoice for space and a separate invoice for the stand, the space would be taxable at the 0 rate, but the stand wouldn't. But you have to separate it. So this is my take on it. I mean, there's been no ruling on this, and there's been no court case on it. But just from my knowledge of tax and legislation, and in terms of the courts and all that, that would be my take on it. That would be my advice. The supply of movable goods by EXSA members under a rental agreement to a non-resident exhibitor may be 0 rated as in require Section 11D of the VAT Act are met. So this is also very important. You see the mention of EXSA members. So this is the supply of the movable goods, which is the ruling. And this is very important, again, mentioning EXSA members. SARS goes on to say in the same ruling, just again highlighting the space situation. In light of paragraph 410 to 412, the supply of exhibition space by EXSA members to foreign exhibitors is subject to VAT at the standard rate in terms of section 71A. So it just shows you how important the charging of space is. You've got to charge VAT on space. So it actually mentioned a couple of times in the ruling where it actually repeats itself in terms of the process. Now, many years ago, I'm talking 15 years ago, the space was actually exempt. Not exempt, it was 0 rated. So there was a change from SARS about 10, 12 years ago, and the supply of exhibition space was incorporated to say you must charge VAT on exhibition space. I think this is very important, Andy, and this is very important for us as an organization, as EXSA, that we have to, EXSA members must obtain and retain the documents, which we've spoken about, 11.3, read by paragraph F of table A and paragraph M of table B and IN. That's the explanatory note when 0 rate is applied. So I think we understand we need to have that information. What's very important for EXSA providing SARS with a list of all EXSA members, together with the VAT numbers who are registered for VAT. Should the names registered change, EXSA must provide SARS with an updated list every 12 months. So I just think, Hanley, and I know we've had some changes within EXSA, and sadly, Leanne is no longer with us, but I think it's very important that we just make sure there is an email address there that you send through details of all the members. In the existing ruling, at the back of the ruling, there's actually members are mentioned who actually are the members who can actually use this ruling. So it's very important that we as EXSA send the latest list through, and then every 12 months, I think if you just send the latest list. So I think that's very important for an EXSA responsibility. There is an address there, and it's on the ruling that we just mentioned that. And I would go with the existing addresses here. This was obviously in 2023, this ruling. So then 24, I don't know, it was probably done. I always did ask Leanne, but I would just do it again, Handy, just in terms of making sure that we are covered in terms of this EXSA ruling, EXSA responsibility. So I imagine a lot of the members are the same, but there are probably some new members. How long does the class ruling apply? So this class ruling is effective from the date of issue and is valid until withdrawn by the Commissioner or expiration of 5 years, or the VAT Act is amended. And the class ruling is subject to provisions of Chapter 7 of the Tax Act, including Section 79 and various other entities. I think what's important is the date that this is effective is the 13th of October 2028. So we're in 2026. We've got the whole of this year, another year, and another year. So we've got another 3 years, just a short of 3 years to go. I think if there's one slide that is very important, in this whole presentation. It's this one, the flow chart. And I will go through it. The first question, is your company an EXSA member? And obviously I'm talking about VATable companies that are VAT registered. If you're not VAT registered, then, you know, this doesn't apply. Is your company VAT EXSA? No, then the ruling doesn't apply. That's not to say you can still claim zero input tax for a zero rating, but there are a whole lot of other requirements, and I don't want to cover that because it's not applicable. So that you can chat to your tax person. If you're a non-EXSA member and you want to see those things, rather become an EXSA member. It's a lot simpler. You just provide this information. Just provide this directive when you do your VAT audit. So is your company an EXSA member? Yes. The next question, is the enterprise foreign? If the enterprise is not foreign, then charge VAT. So if it's an entity like Anglo American, which has got operations throughout the world, and they invoice you from overseas, but it's actually for a local, it's like for mining in Durban, where their local stand is actually, their local companies is being promoted. For me, that is not a foreign enterprise. Okay. So is the enterprise foreign? If it's yes, you go down to the next step. If no, you charge VAT. The next question is, does the enterprise operate exclusively outside of South Africa? If the answer is no, you charge VAT. So this enterprise definition about exclusively operating outside of South Africa, it's a quantifiable one. If the entity is selling products in South Africa, then for me is they have an enterprise in South Africa and you can't plan to charge this VAT. Obviously, on a lot of international conferences, they're here, they don't have a local entity, and therefore you don't have to charge the VAT. If, for instance, it's the whole stand is organized by the international branch. So you sometimes have medical conferences, let's say Abbott, for instance, and it's an international, just say, geriatrics conference, and the international entity is managing it, and it's managing it entirely by getting all the delegates, getting everything. For me, is you wouldn't have to charge VAT, but it hasn't been tested in court. But if there's, so let's say Abbott as an example, and their local branch have invited people and their local branch have organized the stand, then for me, it is operating in South Africa. Obviously, other items like giveaways, you'll need to charge VAT. So in this case, let's say you were selling, let's say, key rings to the client, and it was an international entity. But for me, the key rings actually aren't part of the services operated, the stand building services, so you would not need to charge VAT. What I would do in that case is actually create two invoices. Create one invoice for the corporate goods that you're supplying and charge VAT, and then another one with a stand build, and then don't charge VAT, but then separate it. Because the giveaways in that point are actually they're fully VATable. They don't fit the definition of this ruling. Is the payment made the next step? If you say, does the enterprise operate exclusively out of South Africa? Yes. Is the next question, is the payment made from outside of South Africa? And that's very important. I spoke about there, it can be in rands, but as long as it's made out from outside of South Africa. And it's very easy to answer this question because you would fill in a foreign form. If, let's say, for instance, my example of Abbott, where Abbott internationally organizes the stand, they do everything, but the payment comes from the local branch. For me, that payment's not outside of South Africa, you have to charge VAT. Now, sometimes that's quite hard because you've already now you've charged VAT, you've charged no VAT on this transaction, and then all of a sudden you see that you're actually getting paid by the local company. You then need to advise the international company of the situation. What we do as a company, we actually label this exemption, this VAT issue in our invoice. We have a little note that we carry in our where we actually mention this fact, where we mention that it needs to there's no VAT on enterprise operating outside of South Africa and where the payment is to cover ourselves, because sometimes you might have some changes. Or for instance, what happens is it's paid by credit card. Now that's an interesting one. So on a credit card, you don't get a notification on foreign exchange. Then I would go back to the origination of the credit card and say, was the debit on the credit, and this is the thing you need to ask your clients. So it's a tricky one. Did the debit go through in their local currency? So if I'm in pounds, I pay by credit card, and the transaction goes through as rands, because now you've given a rand quote, and you don't know whether the payment is foreign. In my take is, if the pound account that the entity has is debited in pounds, even though it was converted to rands, for me, it's a payment outside of South Africa. But that's a grey area, and one would need to prove it. So it would need a little bit of work around that. The next thing, is the payment made from outside of South Africa? Yes. The next question is, have you kept proof of the payment? And you know, I imagine that in most of our businesses, we keep those proofs anyway, because, you know, we all have so much documentation that we need to keep. You keep proof of the payment. If you don't keep proof of the payment, you have to charge VAT, which is quite hard, because now you've invoiced the entity without VAT. The entity is foreign enterprise. The payment's made from outside of South Africa, but you don't keep the payment. Then what happens? You should have charged VAT, and SARS will say, hey, listen, you should have charged VAT. You can't show this proof of payments outside. You need to charge VAT. But I think what's important in terms of this is, and Moses, you attest to this, whenever we get questions on this, we mention the VAT ruling, and we talk about the VAT ruling. We never really had any questions where there've been further questions. Am I right, in terms of whether it's a foreign enterprise or not?
No, there isn't. As long as you are able to quote the VAT ruling and also explain where it says on the VAT ruling.
On the VAT ruling.
Yeah.
Okay. So I think we find as an industry, we're not in the spotlight in terms of where we are. Then the next question, have you kept the proof of payment? Yes. No VAT, sale, zero rated. So in terms of the zero rate, you don't charge VAT, but your input costs, your input VAT supply costs can be claimed. I think also what's very, very important, that you have to be an EXSA member to use this ruling. So I think this is a huge benefit for EXSA, and, you know, very, very important in terms of EXSA membership and being part of EXSA in terms of this process. Okay, thank you.
Hi, Justin. Yeah, thanks. You answered the one on the credit card. The only problem is to actually prove it, that it was made outside the country. So essentially what we need to do, if they make a credit card payment, we just need to get a copy of the receipt if possible. I think that's the only way to solve that.
Agreed. So Chad, yeah, it's interesting, you know, yeah, those are the kind of challenges we have, and we're having more and more credit card payments, as you know. What you would have to do then is to say to the customer, to say, listen, I need to see the proof that the payment went through your bank in your own currency, and that, look, it's a benefit to them. But often the problem is with these kind of relationships, and I see that very much with conferences, it's a one-off. So the conference comes here, there's a one-off stand, and you never see them again. And now you need this information. You haven't charged them the VAT, and now you need this information. So it's it needs management, and maybe a question, you know, how are you going to pay? Are you going to pay by credit card, or are you going to be paying via, EFT process?
Or SWIFT transfer. Now, Justin, sorry, just one other question. We also do events. Is this only applicable to exhibition? Or, I mean, we do a lot of events for foreign companies as well, conferences. Is there any definition in this ruling that says it's only applicable to exhibitions?
Yeah, so Chad, the ruling, I mean, I shared, there's 6 lines on it, and it talks about the rental of goods, decor, fixtures and fittings, rental of exhibition space, design of layout, and design of store. So for me is
Grey area.
It's a grey area. You know, if you're doing, so you do furniture rental. So I think furniture rental, you would be fine. But if you were doing AV, it doesn't mention anything about AV. Now, I think if it's an arbitrary AV on a stand, it would be fine. But I think if it was a big a conference around that, I wouldn't know. It's a debatable thing, and there's a risk on that. And, you know, it's something. So it's very much for stand building, store. And we actually, you know, when we applied for this ruling, we mentioned what we did. We didn't really go into the eventing side. We went into very much the exhibition side. But as you know, there is a crossover. So I think it would be a debate. It would be interesting to see what that other section I mentioned, and doing a bit more of a check on that. But I think, you know, it is a very narrow definition.
Because we Justin, just another thing, sorry, now that's unique to us, but we're also doing a lot of long-term rentals. We've actually got contract with quarter rentals, so we're doing a lot of foreign long-term rentals at people's houses. So I suppose that would also be a grey area.
No, I would say that's vatable.
Okay, got it.
Yeah, so that's not a long-term rental, because this is very short-term. And I think when we actually asked for the ruling, we asked for a short-term basis. So if it was a long-term rental, for me, it would be, you would have to charge VAT.
Got it. Okay, thanks, Justin.
So my question is very much similar to what Chad sort of asked. Is I said, how does the VAT ruling apply to event management? For example, the hire of event venue, payments of suppliers like the furniture, flowers, technical, artists and performers, food and beverage. In other words, all the elements that would go into organizing an event, assuming that the event is organized by an event company that is a member of EXSA, and that, according to your definition of what a foreign enterprise is, the client qualifies as that. Does that mean that the event company, which is an EXSA member, can claim the input but doesn't have to charge the organizer from overseas VAT?
So John, I would say that in this case, most of those items would be vatable. So the catering, the artists, the staging, all that would be vatable. But the input in terms of infrastructure, so if there were stands, if there were registration counters, all that sort of thing, I would imagine that would be, I would say that's no VAT on it. So what I would suggest in this case is actually two invoices. One invoice for the catering and the artists and those things, and then a separate one for and John, I'm talking in terms of this directive. So I don't know. There is a section, as I mentioned, there is a section in the Act, and you can maybe look up at it, where it talks about, and I did talk on it a little bit earlier, where there's an export section. You can look at it, and I'm just trying to think. It's section 7, section 11(1)(d). John, you can have a look at that, and maybe you would cover under that. But that would be outside of this ruling. So have a look at that. You might be able to be covered under section 11(1)(d). I haven't looked at that recently, and then it could answer your question. But I would imagine registration and exhibition type things would be no VAT, but the rest I think would be VAT. But check that section, John. I haven't really covered it in this talk, because I've just really been talking about the ruling. But it's an interesting thing. I'm actually going to look up into that section to hear, because I've never had a question like this in terms of what you and Chad have asked in terms of eventing and other elements. And we all, you know, a lot of us in our industry within EXSA members do these kind of services.
Yes, so that's what I was going to say. You know, perhaps it's time, and I'm looking to the Haneli and the EXSA board, is to perhaps time to reach out to SARS and maybe, you know, when we start discussing the new ruling, when this expires, that it now extends beyond just the exhibition element side of it and includes eventing side of it, because obviously there are increasingly more eventing companies that are joining EXSA as members. So it might be a benefit for us to sort of make amendments at this time to the actual ruling and see if these things can be included. But yeah, Just wanted to put that out there. And then again, on the credit card scenario, what happens if the clients, and again, I'm making an assumption here that everything else is present, that it's a that does qualify as a foreign entity, and all of the other qualifications and tick boxes are met in terms of the ruling. What happens if the client is in South Africa, they hold a credit card that is from a foreign bank like Lloyd's of London or Barclays Bank in London, but they need to order and pay for something here while they're in South Africa, and they use their credit card, it gets swiped on a South African credit card machine, but it gets transacted through their Barclays Bank in London. Would that then also be considered a zero rate or a non-exempt item, or would we then have to charge them VAT for that item because they're paying on a South African ground with a South African bank's credit card machine, but their credit card is a foreign card?
Okay, so let me answer that first, and then I'll answer the first part of your question. For me, is because it's even though it's transacted in rands, there's a foreign bank account that's actually debited with a credit card. So they're Lloyd's of London, whatever. For me, that's a foreign payment, and everything else applying, you don't have to charge VAT. So even though it's in South Africa, the rand transaction went through, there is a foreign payment entity because it went through a foreign bank account. But you would have to ask them, and it's tying back to Chad asked, you would have to ask them for proof that actually went through their credit card statement in a foreign currency.
Okay.
I think just in terms of your other question, in terms of expanding the ruling, I'm going to do a bit more investigation on the section 11(1)(d), and I will feed back on that. Because one of the things we just got to be very careful of, this is a great ruling and we really don't want to destroy it.
Yes.
And, I'm always scared to ask for too much. So, this ruling's been around for over 30 years and it's been very beneficial to our industry. And it does make us very competitive, on an international scale, rather than, foreign companies coming in. We don't have to charge, it makes us competitive because we're EXSA members. So I do want to just have a look at that section just to see the implication of that.
Thanks, Justin. I was just putting it out there, just,
Absolutely, John. I think a good move. Let me have a look at it.
Just a quick one. If we're dealing with agencies and the agencies are paying you, how does this ruling, I'm talking about foreign agencies, how does this ruling apply?
Okay, so when you're dealing with foreign agencies, you're actually contracting with that foreign agency. So the invoices to the foreign agency, is that correct in this example? Or the foreign agency's organizing it and somebody else is paying it?
Well, it's an international client that's using an international agency, but we're doing the work on the side.
Okay, so in that situation, is that agency's you got a contractual arrangement with that agency. You don't have a contractual arrangement with the end client, even though you're doing work for the end client. Your contractual relationship is with the agency. Therefore, the agency needs to be a foreign enterprise. The payment needs to come from a foreign bank account. And then obviously the documentation needs to be kept, and there must be no operations of that foreign agency in South Africa. So for me, it's it's who your contractual party is. So it would be quite interesting. This is another thought, and now I'm really throwing the cat amongst the pigeons. Is if, let's say, Anglo American contracted a foreign agency to do the event. We got paid in foreign currency, and the foreign agency has no other operations in South Africa. For me, even though that Anglo American has an enterprise in South Africa, the definition of this, you're dealing with a foreign enterprise as an agency, there is no VAT. But that's my take on it. So it's a very narrow definition I've taken. But like anything, SARS can challenge it. And there's a thing called substance over form in law and in tax. So what is the real substance of this transaction against the legal form? The real substance is it's Anglo-American in South Africa, and therefore VAT should be charged. So I'm just saying this is the kind of thing that is a bit of a debate, but that would be my take on it. But you'd have to tread warily on this matter. So when in doubt, charge VAT. So that's what I say. When in doubt, if you're in doubt with anything here, rather take an easier route. You don't want to not charge VAT. Firstly, there's going to be penalties for not charging VAT of at least 10% in time, then they can invoke other sections of double penalties or 3 times penalties if it's a repeating offence. And you really don't want to get on the wrong side of SARS, because they're just going to hunt you down and make your life a misery. So
Sorry, Justin,
I think it's important.
Can't we say we know you?
You didn't read the disclaimer, did you?
Did you? Yeah, did you read my disclaimer?
I can't read. I've got a hangover.
Yeah, exactly. So that's why I had that disclaimer in the front. You know, I said I can't cover all the angles, and a lot of stuff would need to be, would need to be checked at. Yeah.
Thanks, Justin. There's a comment from Paul, who's also a CA, I think, and he says there are 2 sections that deal with goods and services to foreign entities. Section 11(1)(d) for goods supplied, but can also look at Section 11(2)(l) or 1 for services rendered. Do both apply to this ruling?
Correct. So in the directive, the Section 11(1)(d), I've just spoken to John about it. That's included in the directive. And then the other non-resident zero-rated in Section 11(2)(l) of the VAT Act. So there is a section that would cover this, but I do think that the clarity of having the ruling just makes life so much easier. So there are 2 sections which would cover, and I think it just ties into what you spoke about, John, and it needs a bit of sort of expansion at looking at this, but there's no doubt about it. Those 2 sections do apply, but it does help having a ruling. It's much simpler.
Thanks, Justin.
And I think just on the ruling, what I love about this ruling, it's specific as to what we do. So, to have a ruling on something else and have a general section, this talks about, decoring stands. It talks about the rental of goods, decor, furnishings, erecting the stores. It talks about it.
If the client doesn't send proof of payment, but the bank statement specifies the payment as inward SWIFT payment, it shows foreign payment. Would that been? Okay.
Yeah, thanks. A good question, Ryan. So if the bank statement shows foreign SWIFT, you'll be fine, because that is enough documentary proof. So that's another thing in terms of your bank statement. And obviously, you would need a clearance anyway. So for every payment that comes in from foreign currency needs clearance in terms of our Foreign Exchange Act and foreign exchange controls. So there would be something from the bank, but if it does show in your bank, it does show that it is a foreign payment, it should suffice. It's enough documentary proof. So bank statement is very much a lot of documentary proof available, and it would be enough.
Okay, thanks, Justin. And there's also a question from Green Exhibition. How would this ruling affect event registration companies in South Africa? Okay.
So, Derek, yeah, good question. For me is event registration. It doesn't talk about event registration. I would imagine that if you are renting out the counters and this, if you broke your invoice into the rental part of the actual registration, so the counters and the registration machinery hardware, I would imagine that this would cover in terms of the arranging of rental of goods. I think it would be okay. But in terms of the actual services for registration rental, I wouldn't know. I think we need to look at this other section. So I think we need to look at Section 11(1)(d), which I will look at, and the Section 11(2)(l), just to see how that would impact it. So this was a very narrow ruling that we requested information on, but obviously that's a bit broader. So I think, Hanley, I think we just need to, and thanks for that question, Derek. We need to look a bit further just to see, and maybe we just need an opinion or something. So just leave it in my hands. Give me a bit of time. Obviously, got a lot going on at the moment, but I think it's worthwhile to actually investigate these 2 other sections.
Thank you, Justin.
And get an opinion on it.
I just want to confirm with the members that we actually do update SARS regularly, and now at the end of this renewal session that we've just gone through, obviously people that have not renewed their membership will be removed from this list when we update SARS, and new members will be added. So we do regularly update.
Wonderful.
About three or four times a year. We update so that we stay, as people join the association. And then I've had a few requests for people that want a copy of the VAT ruling. They can just maybe drop me an email, and then I can just send them the copy on that. Justin, thank you very much for your time this morning. It was awesome. I think we all have a better picture now in our heads. Thanks to Chad for asking for pictures. Now we can all understand this. And I said to Justin, if we find that there are more questions and we need to do a follow-up session on this, obviously when he's done some further research, we can always do another session on the ruling. So thank you very much for your time and for everyone for joining in this morning. I think it was an awesome session. Thank you.
Yeah. So Hanley, I think just to add, I think we need to look at these other two sections because it is of interest to other EXSA members, but we can have a subsequent discussion about this.
100%. Thank you very much and have a good day, everyone.